Welcome on board Sunil Subramaniam. Sunil, hi, afternoon. To buy the dip just yet or not is the question.
I think there will be further dips to buy at. I think what we are seeing is FII profit booking because if you recollect last December, there was 70,000 crores of inflows into India from FIIs just after the assembly results. So I believe that while some of it could be long-term money because they were confident of policy continuity, there's also short-term money which is playing this story that the government coming back, so enter in early, and they are booking profits because today now he doesn't want to take a risk, wait for the result, and have another correction and take away a bit of his profits. So this consistent over the last month and a half, we've been seeing selling by the FIS, which is essentially profit booking. And I think so that money again will come back post elections. But because of the nervousness around the election results, because the confidence with which in December there was expectation that the government would come back has probably eased down a bit. While there's still expectation on the street is of this government coming back to power with a majority, the fact that a kind of resounding majority, which was earlier predicted, looks a little bit, market is unsure about it. So this profit booking cycle, I expect it to continue till the election results actually happen. So this May month, I would say, is going to be a volatile month. And hence, depending on what the FIs have owned a lot, like banking was one sector mentioned, right, which they owned a lot historically, they're booking profits and taking money off the table there. So to me, good quality companies are, I think, the focus where you will, the moment there are dips in their price, it's a very good opportunity to buy them. So I would sit with my cash, waiting to see how much further this kind of volatility from FIs will go. As you saw, the AMFI data came today, mutual fund flows, SIP book again has touched a record high. You will again see that it's a kind of, consistent flow into the small and mid caps has started. So there will be broad-based buying opportunities available to fund managers and they will give us support. So I don't expect any deep correction, but volatility, yes. And there will be opportunities to buy stocks at slightly lower levels than they're today also.
Ajay, what's your view on the market mood right now? Do you think that dip today is on account of weekly options expiry? Is it just the large caps coming under pressure because of earnings, or is it that election-related volatility? And what's the best tactical trade at this point of time then?
See, I had put out a couple of notes about sell in May, and it's a nuanced note. If you visit my Twitter handle, it'll be there. And on April 24th, I had put out a thing about election strategy. And whenever the markets have broken out to record highs on an election year, there is a tendency for the markets to revisit the breakout level, either after the elections or just after the election or a little later. So, you can have a look at this on my Twitter handle. It's on April 24th. Basically, the strategy is to be very cautious, and the markets are a bit overdone, and there is a lot of euphoria. I can go on listing 10 things, and they have been classic contrarian signals for me, and it will be too long to go about it here. But the strategy is to watch for critical support at 21,770. If that were to break, I think it's a matter of time. If it does that, there'll be a surprise drop for a lot of people, because most of the players are very bullish on the markets, and markets tends to reward people who are on the minority side. That's how the money flows. Money flows from the majority to the minority. So right now the position is overly bullish, but we are not preempting the markets. We are watching for critical support to break. We are not overly bullish on the markets. We are very specifically bullish on certain names, but the strategy is to be ready to sell the break of critical support.
Let's flip the position. I mean, it has been trending lower. A very clear short trade has been playing out for almost over a week now. So let's look at it from the people, the traders' side who've been short on the market last 7-8 days. Shivangi, if you were a short guy and you've been deep in the money right now, what levels would you like to reduce or take some profit off the table and again short back? Or if not a trending guy but a positional trader, at what levels will you start initiating buy calls? Because this is clearly a confluence of big FI selling and nervousness on the election front, clearly. So do you expect any short covering to start, say, in the last week of May series or the first week of June series when election results are also there, where would you reverse your short trade?
Absolutely, Ajay. This has been discounted in the market as well, and 21,950 was a crucial level, which we are seeing close to that. But 21,777 would be an important level, which was the recent low as well, and that would be a trigger point for people to start booking their shorts or add longs at that point. So this is what is expected, and as rightly said, the election result is just a minor event. It's the weeks before and after that which makes sense. And this is just from the last four sessions that we've seen. It might be the fall, the intensity of the fall will decrease as we head towards the result dates.
Great to have you on the show. We'll let you go on that note as well. Thanks always for joining in. And Jay, thanks for making time out and joining in today. Still not out of the woods. We're down 285 points in the Nifty futures. The Nifty now, in fact, we've fallen not just below 22K, but I think 21,950 also is going to get tested pretty soon because the selling doesn't seem to be abating. We'll take a quick break, continue tracking markets on the other side.
All right, Aditya Agarwala is also joining us to talk technicals, but we have Sundaram Mutual Funds also right now. Sunil Subramaniam is there. Sunil, I was looking at the data. The DIF flows was showing some kind of a risk off, at least the small cap, mid cap end of the flows last few months. That seemed to have got halted. What are your thoughts there? People have started coming back to small cap, mid cap?
Yes, because I think SEBI's statement around froth in certain segments of the small and mid caps had led to a little bit of, I wouldn't call it panic, but nervousness in investors saying, is this SEBI statement and the mutual funds were required to disclose their liquidity and concentration and all that, is that going to lead to some correction? So there was a little bit of a pause. So if you see, along with that, the SIP book had also paused at 19,100, 200 levels. But the moment the mutual funds release the data to show that there is no liquidity concern and that they're all well diversified, I think the small caps have started to rise again, and the flows are also following that pattern. So I think it was just around the SEBI remark that there was a hint of nervousness in investors, and that month you saw large cap flows also go up a bit. Now it's again, order has been restored, large cap funds have come down, but I'm happy to also note that people are not only added to small and mid cap, but flexi cap, multi cap, those diversified funds have also seen incremental flows. So there's a maturity of the investor coming in here, and they are broad basing it. And the essential reason for this is the confidence in the economy, domestic economy, because that's where it's closely related to mid caps, and Indian investors are also aware of the economy and its growth. So I think, to summarize, yes, there was a little bit of a blip in terms of worry over small and mid cap valuations. They continue to be at a premium to large caps, no doubt. But that's on the basis of an expectation that as the business cycle progresses and capacity creation really picks up steam, it's the domestic economy and the small and mid caps which will post higher and higher EPS growth, better than consensus estimate. And hence these, whatever you call that, very high valuations related to large cap would get justified by the superior earnings growth. That's the expectation. So if you factor in those earnings growth actually happening, then they are not overvalued. The only issue will be if there's a negative surprise on the earnings growth, which as the coming quarters will reveal. But otherwise, I think the nervousness around investing in small and mid cap has, I think, eased. And that's why 1,000 crore rise in the SIP book, of which my estimate is 60 to 70% would have been in small and mid caps, right? Indicates that resurgence of the confidence in that space.
Whenever there are signs of some bottoming out, while you do anticipate further weakness in the markets, tactically should one look at higher allocation towards small and mid caps, which have done well, and that's more, I guess, a specific stock by stock story, or do you think it's the large caps which are going to come back faster because they are the ones which have been beaten down also more?
So I would say that's a time frame thing. For a year and a half, large caps would be the better place to play because a lot of the growth of the next 2, 3 years has been factored into mid and small cap prices. So if you have a 3 to 5 year outlook, then picking good quality mid and small caps makes sense. But over the next year and a half, because the FIS have gone out and hence large caps have corrected, when they come back, immediately large caps will bounce back. So with a short term 1.5 year view, yes, it makes sense to have a high degree of large caps in your portfolio. But if you have a slightly longer stretch and look at the domestic economy as a key driver of EPS, then small and mid caps should outfully continue to outperform. So it's a time-driven thing. Second is your ability to manage volatility. Right, large caps not only in the short term will give you good returns, they'll also be less volatile than small and mid caps. So for an investor temperament, right, if you are comfortable with taking risk and managing volatility, then small and mid caps will continue to be your growth drivers. But if you are a little moderate there and you don't want too much of a volatility in your portfolio, then adding a little more. So I think the right answer is to look at the flexi cap, large and mid cap, multi cap as a space to put money in, because there you automatically get this allocation across the cap curve.
Aditya, you look at options as well. At this hour, 3:10, certain section of the market is screaming red. But what is the option data telling you right now? PCR, RSIs, all of that put together. Any sign of near-term rebound or not quite?
Yet, Ajay, to be honest, if we take a look at the way option data is panning out at the start of the day, trading session 20 to 200 had the maximum open interest, and then it shifted to 22,000, and now if I look at it, maybe 20,000 to about 22,000 below. We are seeing expiry. So clearly, the option data is suggesting markets will expire below 22,000. There is a huge buildup in the call side. At the morning, the PCR did jump a bit, which showed that there is a bit of a long buildup, but that has again shifted, Ajay. So there is no sign of any long trade yet. But yes, markets are looking little stretched and oversold. Yet to call a bottom. Tomorrow will be a key trading session we need to watch out for. Usually these sharp down moves see a positive divergences building up on shorter term time frame charts with respect to RSI. So traders should watch out for that in trade today. If that starts to happen, then maybe we could be in for a good short covering rally. Apart from that, there is a clear sign of sharp weakness in the market.
Okay, with that sharp weakness, we'll take a very quick break and come right back. We'll track the last few minutes of trade this afternoon. SBI, that's had quite a choppy ride actually after its numbers. Quite a bit of crisscross, and now finally it settles in with that 0.5% gain mark, clearly off its day's peak. Hero MotoCorp still going strong. TVS Motors still holding out. Tata Motors ahead of its numbers tomorrow is still looking very, very strong indeed. And so is M&M, by the way. And a couple of these technology names are the ones which are actually still holding on to their gains. But let me take it across to Ansh, find out what are some of the volume buzzers in trade. Ansh?
Right, so let's start with one of the top draggers of market actually, and that's HDFC Bank. The stock is contributing over 50 points in Nifty's down move and over 250 points in Nifty Bank's down move. The stock has actually given a breakdown from its critical support of around 1,480 level, and it has also slipped below its 50 DMA, touching 1 month low, indicating very strong bearish sentiment in the stock. Apart from this, Hero MotoCorp will also be in focus, as the stock has actually given a breakout from its downward sloping resistance trend line with over 5 times its volume as compared to its 10 session average trading volume. The stock has also touched 2-month high level on intraday basis as well. Lastly, Tata Investment will be in focus, as this stock has actually also given a breakout from its downward sloping resistance trend line, and it has also touched upper circuit of 5%, surpassing above 20 DMA level. So keep an eye on the stocks.
We shall watch out for that, and we're watching out for what's happening at the index level itself, because at one point of time 21,950 was a bit of a support. That's also getting completely broken down right now. 21,938. A quick word coming in on Jefferies and SBI, and that would explain the kind of tumble we have seen in the last few minutes. They are acknowledging that the numbers have been ahead of estimates and the NII growth is higher than estimates, but the majority of the beat is led by lower staff costs, higher treasury gain and lower provisions, and some of these may not be recurring in nature. So the quality of earnings is what they are questioning. Yes, the slippages remain low and the gross net NPLs are down marginally, but I think it's more about the quality of that sustainability of the beat in profits is something to watch out for. We also have Sunil Subramaniam still with us. Sunil, just wanted to get a sense with respect to the private banking names. At what level or at what point of time would you be a buyer in the likes of Kotak Mahindra Bank, HDFC Bank, ICICI of the world?
I think I'll be a consistent buyer because these are, one, over ownership by FIIs. The second, the overall, it started with the RBI clamping down on retail lending, increasing margins there and net capital adequacy requirements. But if you look at the fact that as a growth story of the Indian economy and as discretionary consumption picks up, right, you will see these banks again being the leaders in lending. And I would always back these strong because they are well capitalized, well professionalized, good systems and processes. So I think short-term corrections remain a good opportunity to accumulate these because as they are well owned. So I already own most of these in my portfolio, let us say. So adding them on the dips makes sense because I'm not getting rid of my portfolio, right, as a fund house. So I think that to the extent that we like some of these banks, where we already hold them, we'll continue to buy them on dips. I don't see any major concern around this. And I think NPL levels will keep coming down gradually. Net interest margins will be under pressure, but the volume of loan growth as private corporate capex over the next 6 to 8 months also comes in, will definitely compensate for the drop in margins. So if you look at NIM into loans, right, the value absolute EPS growth should come in well. So I continue to be a buyer and these, every dip that is there in good quality private sector banks.
Buyer in the good quality private banks. Thanks so much, Sunil, for joining us and talking to us about your market view. But
if you like this video, then like, share and subscribe to ET Now.